Hello everybody. Today I'm looking at Anglo Saxon currencies, not because speaking English gives them an extra allure, but because this week I found out there's such a thing as a Falkland Islands pound. They have their own notes. The code is FKP, by the way, in case you're interested. And this week the S&P Global gave this British overseas territory, which gets no financial support from the UK, an A+ investment grade for its sovereign debt. They want to borrow 60 million quid to improve the port facilities at their capital, Stanley. I mean, this isn't bad going for a population of 2,563 people, precisely. So here we go. We're going to look at my first chart, regular pound, British pound, sterling, as we used to call it. It's a daily chart. I've done this one before. I did it on the 22nd of April. So this is just a quick update. And you can see that eventually we did find support at the 38%, 50% retracement levels. We've moved up again we're quite sprightly above that cloud, isn't it? I mean, it's really sort of popped up. My target now is that February high at 142.35 US dollars per pound, and then a far more important 143.5, which is the 50% retracement since the high in 2014. Moving on swiftly to my second chart is the Australian dollar. Now this one, interestingly, has had a sort of national lockdown, shall we say. So it's been able to cut itself off from the rest of the world. And yet you can see this weekly chart looks very much like the sterling one, where support at 38% and 50% held. That's just after the most recent rally. You know, it's not long-term sort of thing. You've got massive rising clouds, moving averages have been bullish for yonks. And what's more interesting is that, like all these other Anglo-Saxon currencies, a put on the Australian dollar, i.e. the right to sell an Australian dollar, has persistently higher implied volatility than its calls. There's absolute perpetual skew on this lot. It must be because we speak English. And my third and final chart, which is perhaps the most interesting of the three, is the Canadian dollar. This is quoted the European way round as how many Canadian dollars do you need per greenback. Very, very neat trend channel. Momentum is more bearish against the US dollar than it has been since 2010. It's a little bit oversold on the weekly chart, but you know, not bad going really. You can see all the previous annotations and things that I've made there. The more important point though is that Q1 2020 high at 1.4665 CAD per US is part of a massive double top at the same level where the high in 2016. We're now about to test pivotal support between 1.19 and 1.2 CAD per greenback. I've got a feeling we're going to go below these. I see a collapse from there, through there, to one standard deviation below the mean regression since 1972. We're looking at very long-term ideas here, and that should get us down to 1.13 CAD per greenback. The next question obviously is going to be, is parity ahoy? Well, ahoy there, troops, and I hope to see you next week with some more good ideas for you to trade with.